Hello, folks. It is Saturday morning, June 29th. It's about 8:30. I'm on the East Coast of the United States. Just got back from New York City, first time ever. 8.5 million people in a relatively small area. It was an experience. So, all right, let's get rolling. What I what I'm focused on in this particular video is gold, and in particular, what happened on Friday. What gave us this $54 pop in the price of gold on Friday. And of course, that puts us back up here challenging $2,000 level. And we can see that the high of the day was 2002. So actually popped over 2000 and closed at 1999.9. So just under the $2,000 level on the close for the week. And so I'm looking into trying to answer the question for myself, what caused that pop in the price of gold? And so I think these are oops, that's the wrong slide there, excuse me. I think these are some of the drivers potentially causing that. And of course, we're into the strong season for the precious metals. Going into the fall, the metals tend to be stronger during the fall. We've had a 3-month downtrend in gold. Took gold to an oversold level, and so now we're coming out of that oversoldness, markets being oversold, and headed back towards the overbought level, because keep in mind all of the financial markets and most things in the world are cyclical. Reversion to the mean. Financial instruments tend to fluctuate on either side of the mean. They go to one extreme and then to the other. Back and forth, endless cycles. And then, of course, we've got the BRICS Plus Summit coming up August 22nd. There's been a lot of chatter, people expecting the BRICS to announce a gold-backed currency at this summit. That's not really what I'm expecting to occur, but I'll get into that in another video, separate video. Russia ended the grain deal, and then this is me hypothesizing, in order to emphasize that they're really done with the grain deal, they did a series of missile strikes over 4 days or so on the city of Odessa, and in particular the port facilities. So not only did they end the grain deal, they took out the port facilities where you could load grain. And so even if NATO or whoever was to send grain ships to Odessa, there are no facilities for loading grain. And so Russia made it clear that the grain deal is done for now. And so obviously that caused an uptick in the price of grains, which, supports the idea of inflation. Obviously, this is an increase in geopolitical tensions. The ending the grain deal by itself, we could talk about that, but that's not really that big a deal. Striking Odessa and knocking out the grain facilities, that's a big deal. That was a significant step on Russia's part. And of course, not long before Russia did this, Ukraine struck at the Kerch Bridge. And so, tit for tat, bad things happen when countries go to war. We got rate hikes from both the U.S. Fed and the ECB. Both entities hiked a 1/4 point, and then we'll talk more in detail about Jay Powell's statement after the Fed raised interest rates, and then gas prices have reached an 8-month high, which again supports the idea that inflation is still a factor. although some people would like to pretend that inflation is backing off. And of course, that's not my belief at all. Inflation is going to be higher for longer, just like interest rates, higher for longer. I'm showing this map just to not only show, there's Odessa, and so ending the grain deal and striking these ports in Odessa definitively shut down the grain deal. Russia also struck, this is Reni. And so Reni is a good ways up the Danube River. It's another port grain loading facilities in Reni, and Russia also struck this again, in my opinion, to emphasize the fact that for now, Ukraine is not shipping grains. And of course, that was one of the sources of income that Ukraine had. And that source of income has now been put to a halt by Russia. And another thing that this strike on Reni demonstrates is that Russia is not afraid to strike right on the borders of NATO countries. The Danube is border with Romania, and right now we've got the 101st Airborne. They're actually deployed in Romania, and so anyway, that's interesting that Russia struck not only Odessa but Reni as well. So enough about that. Let's keep rolling. This is the seasonality chart, and we can see, the precious metals, gold in particular, tends to hit a low somewhere in July and then heads up into its high for the year in mid to late September or October. So mid-October tends to be a seasonal high in gold. Then this article, and I'll provide the link to this article in the comment section below, or in the description of the video. This is Wolf Street talking about Jay Powell's conference after the Fed raised rates. This is a copy of that article where I've highlighted the things that we'll just take a quick look at. And so, of course, the headline, this is significant. Jay Powell is saying that not only do we have another hike likely this year, we probably got multiple hikes likely in the rest of 2023, which would take us to 6%. So currently we're at 5.5%. Another 2 hikes would take us to 6%, assuming obviously that they're quarter point hikes. This meeting, after the raising of rates, this conference has pulled the rug out from widely held assumptions that, people who are expecting a pivot, a pause, whatever, Jay Powell, basically a decrease in interest rates. Jay Powell is making it clear that's not going to happen. Interest rates will remain higher for longer than people would like. And of course, that supports my bias as well, that interest rates will be higher for longer than people are expecting. Additional rate hikes are on the table, plural, so multiple hikes, which again, 2 hikes would take us to 6%. We've got three more meetings this year. Next meeting is in September. So plural hikes still on the table, 2 more hikes. They're still focused on getting inflation under control, which, as I've said multiple times, that's BS. They don't care about inflation. The whole objective of the Federal Reserve and all central banks is to create inflation. They always talk about their 2% target. They want inflation. It's part of their mandate. And so whenever they say, when the talking heads talk about getting inflation under control, you just know that that's BS. They want inflation. So anyway, that's BS. He talked about the strength of the economy. And of course, when the economy is strong, that gives them room to tighten or raise interest rates. And so here's Jay Powell saying, stronger growth could lead over time to higher inflation. Blah, blah, blah. Some people have been pointing at the June CPI, which was suggested that inflation is softening or decreasing. And Jay Powell is saying, well, that's just one good reading, and we don't want to be fooled by one good reading. We don't want to read too much into a single reading. Long way to go. We're not being restrictive enough. We need to get back to our 2% target. Blah, blah, blah again. Process of getting inflation back down to 2% has a long way to go. Sigh. And so anyway, again, I'm emphasizing this article because it was a good summary of where I believe we're at with the Fed and interest rates. And again, I'll include a link to that article in the description below this video. This is gasoline futures in the daily time frame. And if you're betting on higher gasoline prices, this is a bullish chart. It would support your bet or your trading position on higher gasoline prices. We can see a couple of things. We've gotten a recent rise in prices, have broken above this horizontal support resistance level, and prices now consolidating above that level. And so to my eye, that's what we're seeing here. This is a breakout and then a consolidation above the breakout level. Look at these volume spikes on the last two trading days. So that's Friday and Thursday of this past week. Big spike in volume, which again, suggestive of bullish action, higher prices to come. MACD in bull mode on a buy signal, energy very elevated. And of course, the breakout, this spike higher, we bumped into resistance at the median line of this Andrews pitchfork, and now we're getting a consolidation below that level. But I'd also point out that this is a sideways consolidation, not a pullback, which is a sign of strength, indicative of strength. Basically, price gathering energy for a push higher up through that resistance level. I'd also point out one of the things that caught my eye on this chart. Notice that the moving averages are in bullish alignment. We've got the 20-day above the 50-day, which is above the 200-day. So bullish alignment of the moving averages. And if we go back in time, notice that this is the last point on this chart where we had bullish alignment of the moving averages, and it resulted in a price rise of about $2 a gallon. And so, this bullish alignment here is suggestive of a $2 rally, potentially this summer. And of course, summer is driving season. Gasoline prices tend to head higher. And so anyway, bullish chart for the price of gasoline, which, gasoline affects inflation because everything is transported via gasoline. Consumers need gasoline to commute back and forth to work, get to the grocery store, take their summer vacations. Anyway, higher gasoline prices suggest higher inflation and pervasive inflation because, again, transportation costs, energy costs affect just about everything. This is the inflation chart from John Williams' site, Shadow Stats. This is him tracking inflation based on the 1980 BLS methodology. That was before the BLS introduced all their inflation massaging techniques. In blue, this is the shadow stats inflation at, let's call it 12%, whereas the BLS is claiming that inflation right now is, what is that, 3.5%, I think, something like that. So quite a difference between, the BLS claiming 3.5 and John Williams using the BLS's own methodology from 1980 showing inflation at 12.5%. And of course, the 12% is more realistic. If you, like me, you enjoy having a roof over your head, you like to eat food 2 or 3 times a day, you like to have gasoline in your car, insurance, health, I just... sigh again. These BLS numbers, just incredible. Oh, and that was one of the things that struck me. Jay Powell in his conference, he's talking about being data dependent. And so when the Fed says that it's being data dependent, what data is it talking about? The bullshit data from the BLS? I mean, the Bureau of Lying Statistics, the BLS. Is that the data that the Fed is going to be dependent on, or real data? Anyway, I don't want to go off on a tangent. All right, so that's enough of my preliminary. Let's go into the charts. Gold in the monthly, just a high consolidation. And again, I wouldn't call this a pullback. We got, it's kind of, you could call this a triple top. We got a spike up to 2089, so back up, challenging all-time highs, and then a pullback. But really, this is a high consolidation. So gold has not needed a big correction from that spike. Just high consolidation. In my opinion, we're still well on track for a move to new all-time highs. Based on this flag pattern, and that's this pink line is the flag pole, this pennant, that's the flag, and then the way this pattern tends to resolve statistically is that we'll get a duplicate of the flagpole, and that's what this pink line is. That's a duplicate of the flagpole. It gives us a target up at about 2,500. MACD in bull mode on a buy signal, energy very elevated. So in the monthly time frame, this is a bullish chart. Gold is headed higher in the monthly time frame. Here in the weekly, we've got gold kind of, again, sideways consolidation above the 10-week moving average and also above the horizontal support resistance level. So, somewhat bullish action based on price. You could make a case. Both of these candles are dojis, and notice that the upper wicks are longer than the lower wicks. You could make a case that that's a bearish indication, but overall, I would say that this is a bullish chart. MACD in bull mode, currently on a sell signal. Little bit overbought based on MACD, based on this prior peak in MACD. MACD reached this level, and then we got a 3-month correction, and now we're back up here challenging that level again. We broke through it, but now we've pulled back below it. But anyway, my expectation is that gold in this time frame, MACD is going to push through and above that level, and then of course be challenging this previous high, and probably get us to a new all-time high. And keep in mind again that we're challenging the 2,000 level. Based on this daily action. So here we are in the daily chart. This is Friday, and again, this is where we started. Big gap. That's on Thursday, gold was looking pretty sad. We got a drop of $24, that took us down below both the 50 and the 20-day moving averages. And then we opened Friday, or the overnight session Friday, big gap higher. And then, of course, that upward momentum continued throughout the trading session during the day. We ended up $54 higher on Friday. So very bullish action. Again, challenging the $2,000 level. MACD in bull mode on a buy signal. Note the strong uptick in MACD on Friday. Energy very elevated. MACD in mid-range between being oversold and overbought. And so lots of room for MACD to move higher in this time frame. And so just really bullish action in gold on Friday. And again, that's why I was trying to understand, what motivated that move on Friday. And I can't point at any single thing that would have caused that, other than perhaps investors are realizing that we're not going to get a Fed pivot. And so if your strategy is, the Fed's going to pivot and start moving rates lower, well, no, that's not going to happen. And of course, this is just Brian stating his opinion. Interest rates are not only going to remain high, they are headed even higher. And so perhaps investors are realizing that based on last week's action. Perhaps some of this move in gold was related to geopolitics, Russia ending the grain deal. And I didn't mention, it could be creeping into investors' awareness that Ukraine is losing. The counteroffensive is not going well for Ukraine at all. That basically they were saying before they started back in early June, the narrative was Ukraine's going to come out with this lightning attack, and within 72 hours, Russia was going to crumble, be in a state of chaos, and that Ukraine would basically walk to Moscow within 72 hours. And here we are 2 months later, and not only has that not occurred, Ukraine has yet to reach the first defensive line that Russia has established, of 3. So Russia has established 3 very strong defensive lines, and in 2 months, Ukraine has failed to reach even the first of those defensive lines. All they've been doing for 2 months is grinding themselves up in this gray zone before they get to the first defensive line. And so anyway, an awareness of that has been creeping into mainstream media. And so perhaps investors are starting to react to acknowledge that this counteroffensive is not going well. Ukraine is not going to win this war. And so anyway, I don't have a definitive answer for why gold popped like that on Friday. I suspect it's a number of factors. And that's what I shared in this chart. These are the cumulative factors that I think are currently driving gold price. So this is silver in the monthly time frame, just sideways consolidation, MACD in bull mode on a buy signal, energy very elevated. So not exciting, but supportive. This chart does not suggest lower prices. It doesn't really suggest higher prices. Kind of a slow grind at this point, sideways consolidation. In the weekly time frame, silver appears to be finding support along the median line of this modified shift pitchfork, currently up above the 10-week moving average. Got a little bit of a pullback. 3 weeks ago, we had a strong move higher in silver, and now we're getting a little bit of a pullback from that move. MACD in bull mode, currently on a sell signal, although looks like we're headed towards a new buy signal shortly. Energy is elevated. So, not especially bullish in this time frame. Although, let me point out, this is definitely an uptrend in silver. So if we start here, low, low, higher low. All right, I'm not doing this very well. And another higher low. So anyway, definition of an uptrend, we get a high, a higher low, a higher high, a higher low, and the next in the series we could expect would be another higher high, and probably up here challenging $28 or so. So anyway, silver is in a uptrend in this time frame. This is the official, or meets the official definition of an uptrend, a series of higher highs and higher lows. So actually that is a bullish chart for silver. Here in the daily time frame, got the big move 3 weeks ago, pullback, currently getting a consolidation above this horizontal support resistance level, coincident with the 20-day moving average. MACD in bull mode, just got a new sell signal from MACD. Energy is elevated. So we did get a little bit of a positive move on Friday. And so, that's one of the things we'd like to see between silver and gold, is that they validate one another. And so we got a big move in gold on Friday. Did not get validation from silver on Friday, just a small gain in silver. So, but again, we got a big move in silver 3 weeks ago, and we didn't get that move in gold. And so, they are validating one another, but there's a time offset between the two currently. The mining stocks have yet to participate wide scale, broad sector participation in the mining stocks. They're not following the metals yet, albeit they are in an uptrend. Here in the monthly time frame, we can see we got a low back in, that was September of 22. We are moving higher from that level. MACD still in bear mode, currently on a buy signal. Energy above halfway, heading higher. Weekly time frame, again, this is an uptrend. High, higher low, higher high, higher low. So official uptrend. Not very exciting, but it is an uptrend. Price gradually working its way higher. MACD is in bull mode, currently on a sell signal. Energy below half range. So not super exciting, but is an uptrend from that low back in mid 22. Daily time frame of the stocks, got a nice move higher 2 weeks ago or so. I suspect that was in response to silver's big move. Now we've headed lower, but I would expect to see this coming week that we'll get some more upward action in the mining stocks based on gold's big move Friday. Interesting that the mining stocks did not respond to gold's move on Friday. And it's just popped into my head that this lack of correlation on Friday, we got a $54 move in gold. The stocks didn't really respond. They stopped their downtrend, but didn't get a pop higher. And it just popped into my head that that could suggest that gold was responding to geopolitical factors more than financial factors. People were buying gold out of, fear, if you want to look at it that way, concerns about geopolitics, war, basically. Gold moves higher in wartime, or when there is concerns about war. Whereas that's not so much the case with stocks. And so anyway, just an idea. I'll give that some more consideration. Obviously, one of our normal drivers for the precious metals would be a weak dollar, but we don't really have that happening here in the monthly time frame. Just sideways consolidation of the dollar. Weekly time frame, more of the same, little bit of a downtrend, running into resistance at this is the upper median line extension of this modified shift pitchfork, resistance at the 40-week, the 10-week moving average, MACD in bear mode, energy very low. So dollar not looking strong in the weekly time frame. But in the daily time frame, the dollar has been strong, and in particular there in Thursday, got a big move higher and a big push through resistance at the 20-day moving average and this median line of this modified shift pitchfork. So big move on Thursday, which makes the move in gold on Friday even more surprising. That in light of, or despite strength in the U.S. dollar, gold was still able to add $54 to its price on Friday. So anyway, this obviously strengthened the U.S. dollar in the past week and a half, ran into resistance at this horizontal level and pulled back on Friday. That's a doji candle. Could be a topping candle, suggesting another move lower in the dollar. Don't know. That's all I've got for the charts. One last thing, and this is just for fun. If you like watching videos, sometimes I watch videos before I go to bed. This is Katina Eats Kilos. That's her channel on YouTube. This young lady, she's 125 pounds, and you would not believe how much food she can put down her gullet. She does food challenges, and that's her shtick. That's what she does on her YouTube channel. This particular challenge, so she finished that whole burger, that's 20 patties, 3 to 4 ounce hamburger patties, 20 of them, big stack of fries with cheese sauce, a huge strawberry shake, and a stack of wings. In this particular food challenge, she finished all of the burger, all of the fries, all of the shake. She did not do any of the wings, and so she didn't finish this particular challenge. Usually she does finish the challenges that she starts. And anyway, that's just for fun. That's all I got for you, folks. I'll talk to you in the next video.